Thanks for joining our first ever Ask Me Anything series. My name is Nikolai. I'm Editor-in-Chief of FinanceFeeds. Joining me today from Down Under is Gavin White, who is Group CEO at 26 Degrees. Gavin, thanks for taking the time to join us for this new format of interviews that we've got going at FinanceFeeds.
No, it's great. Greatest pleasure, Nikolai. It's always good to see you, but I must say it's a beautiful day out on Sydney Harbour and you've got me inside for that. So I'm doing it under duress, but I'm sure I'll enjoy it.
Great, awesome. So, Gavin, we've got quite a number of questions that have been received prior to our session today. I wanted to jump right in, if you don't mind, and throw a couple of questions your way. The first one comes from Julian Mitchell, and the question is there a plan to further expand 26 Degrees in Europe? We obviously know that you've been doing quite a lot of things in Europe over the last few years. Are there any plans to expand?
As you know, we've already got offices in London and in Cyprus, and our London office is a sales sort of representative office. Our Cyprus office is integral, crucial to our whole operation. We've got about 25 people there. It's an excellent team that we've curated, and they support our business for the sort of half the day where the Sydney headquarters is not in the office. But we also know that there's great demand for our services in other parts of Europe for all of our services. So the broker-dealer business that we do, the wholesale broker-dealer business that we do, but also the hedge fund prime services offering that we have, which is growing fantastically over the last few years. And then the affiliated sort of offerings that we have around that of capital introduction and outsourced execution. Definitely hedge fund prime services, capital introduction and outsourced execution. There is a lot of green field for us. France, Spain, some of the Nordic countries are already important to us, and there's obviously a need for us to have more of a presence in those places, and we've got a plan to do it. Takes a bit of time, but within 3 months, I think there'll be some developments there in terms of more of a presence in those parts of Europe.
Great, interesting. And you mentioned Nordic countries. Is there a particular reason why Nordic countries are important to Europe in our sense?
Yeah, I think so. I think what we've seen is that the managers in the Nordic countries, the hedge fund managers, are distinctly different. They are a different culture. They have a different sort of background and a different approach and view of markets. And it's that difference that the institutional, the big allocators around the world are looking for. They know how to go to the big hedge funds and follow the crowd. But what they all need is unique alpha. They need to find those people who are uniquely skilled in their analysis of investment opportunities in a particular area. So emerging or very focused hedge funds. We see that a lot in Asia, and that's where we've been very successful. That's been our main home ground is Asia, up into Hong Kong, Singapore, Taiwan, Korea. But we've seen in the same sort of uniqueness in that Nordic area and the way in which the managers specialise in things that and have outcomes that are not correlated to the bigger, more obvious investors or managers.
Interesting.
So, it's our job to introduce those to big investors around the world or allocators.
Great. Sort of speaking about geography as well, we have a question that came in from Anthony. He had asked, which regions do you see expanding the regulatory authority or changing rules with the aim to further weed out bad actors or to better the institutional and CFD trading space?
Yeah, I think that's definitely in the broker-dealer side of our business where it is exposed to retail. I mean, we don't have retail clients ourselves, but we have our own clients, so broker-dealers that take on retail clients, and that's where we get the sensitivity to the changes in regulatory environments around the world to our business. And also just, I think being good actors in the market, we're keeping track of the regulatory trajectories, and we're very much in favour of the protection of the retail client and the less sophisticated people that are getting access to the market. I think, US and Europe UK have already made some pretty big changes. There's been a lot of work done, I think. It would be a shame to see that undone, given the current changes in the US political environment. Because I'm in favour of the little person being protected, and I think that regulation is important in that regard. It can stop innovation, and yes, it can sort of dampen the top side, but at least it protects those people that are less sophisticated and vulnerable from being affected by bad actors. So I think in the US and Europe and UK, the trajectory is great. I think and it's already happened, what we're seeing right now is the one that's happening now is ASIC. ASIC is the one that seems to be really focused now on making some changes and enforcing those changes pretty rigorously. And again, what is good is they do have a very good focus on their goal and what their mission is, and that is protect retail unsophisticated clients. I think they're doing a good job of it.
Great. Gavin, much has been said about the launch of what's called pairs CFDs at 26 degrees. We at FinanceFeeds have spoken to yourself and quite a number of your team members regarding these new, maybe we can't call them asset classes, but definitely new trading products. And I wanted to find out, it's been quite a while since they were launched. Which are the most popular pair CFDs right now in the 26 degrees offering? This question actually comes from Raj.
From Raj. Okay, it's interesting. I thought you were about to say someone from Japan, because Japan has been, our best marketplace for this product, and I think it's partly because they're very au fait or very comfortable with pairs in FX. They've been trading FX, Japanese retail understand FX very well. And then it's not much of a conceptual shift to be trading a stock against a stock or an index against an index. And you can leave to take profit, and you can see charts, and you can do everything just like it's an instrument. And it is just like every other instrument, but you're trading something relatively against another. The perfect part is you can leave stop losses and protect yourself. If you tried to do that before the pairs offering, you would have to leave stop losses on your legs, which if anyone's tried it, it is extremely difficult to do that. So we accommodate people being able to take very simple trades on individual instruments against another instrument of their choice. So in terms of what's been popular, like I said, I think the Japanese market is really well and truly the early uptakers of this. And there's just been a lot of interest in NASDAQ Nikkei, which seems obvious. They're trading those differentials, but really the other theme I think is, and this is probably more universal rather than just Japan, but it's Dow against gold. And anything against gold is really the theme at the moment. But Dow against gold, some of the interesting things we've seen from Australian retail traders or Australian brokers that have retail traders is a mining stock against gold. So they'll try and hedge out the gold exposure and just have exposure to the company risk. It's really interesting, some of the things that you see people doing with this product. And it's what institutional and hedge fund traders have been doing for 50 years. So it's great that retail can catch up. The one last thing is that I think the one that's really caught my attention is because of the geopolitical changes and some of the announcements we've had out. Well, I think the changes since September between the US and China and the different potential outcomes of different decisions. There has been some, really amazing decisions, and there's been some really shocking things that have seen the China A50 against the S&P as a pair move quite dramatically. In late September, it was essentially moving like crypto. So it's an amazing volatility.
Great. Gavin, there's been quite a lot of talk in the financial media and elsewhere regarding AI, right? Artificial intelligence. And big brand names like NVIDIA and other companies that participate specifically in this space. I was wondering, are you getting any interest or demand from customers to build out a pair CFD or several products that essentially encapsulate, some of these
I say,
individual names,
yeah.
in the individual names versus some other asset or a particular currency?
Yep, absolutely, absolutely. That's exactly what they're using pairs for. So when there's a theme and it's a bit of a black and white theme, it's the perfect product for that, especially if it's potentially a short-term thing where you're looking for profit announcements from NVIDIA, or you're waiting for maybe the next announcement from DeepSeek, from China, and it could move something really dramatically. That's what you're looking for. And so these thematic pairs are very, 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 very much of interest. AI, obviously. So, you would pick a company, NVIDIA, obviously, that is very tied into AI, and then you would pick the one that is sort of going, no, we're not really ready for that yet, and it's not really going to happen, and you might, go short that one. And that's the idea of being long. And the idea is that if you're right and AI does boom, NVIDIA takes off, and that other one that you're short, it goes down relatively, and you've made, it's a very big move because they're negatively correlated stocks, and that's what you're trying to look for in your pairs if you're looking for a big move.
Mm-hmm. Great. I wanted to sort of shift focus a little bit and talk about equities. This is something that is actually came in from Alex. He mentioned that there's a push in the U.S. to launch 24/7 equities trading with the likes of 24X. I believe he's speaking about 24 Exchange, the company 24 Exchange. Getting approval from the SEC, and then also New York Stock Exchange expanding its ARCA equities trading hours recently. Do you see this playing out in equities globally? And maybe how is 26 Degrees positioned to help facilitate round-the-clock trading, whether it be in equities or in other markets that traditionally, have a open and close?
It's an absolute no-brainer in my mind. It's going to go 24 hours, no doubt about it. There's massive demand, and there's no real reason why it shouldn't. I think the technology's there now, and the settlements technology and that sort of thing is there to support it. And like I said, there is massive demand from the part of the world that I'm in Asia, to be able to trade US stocks from after the close into their early morning is something that is very enticing, I think, to them. And I think it's a no-brainer. It's going to happen. I have to say that what it took was someone or a company or a founder who believed in it. And there's been a number that had, but I've got to take my hat off to Dmitry Galanov from 24X. I must say I wouldn't have thought it could be done from someone, from a company like him. I thought it was going to be one of the biggest ones. But he's had a passion, he's had a drive, and he's made it happen. You've got to take your hat off to him. Unfortunately, I think it's going to be hard for him to compete as the big guys start coming on. We've just seen CBOE has announced that they're also planning to launch 24/5 US equities. So it's definitely happening. The CBOE is in there as well. But yeah, it's good to see the guys like the entrepreneurial guys like Dimitri have an idea and believe in it and push through and get there before some of the bigger guys have.
Mm-hmm. Great. We have a question from John. It's in regards to retail liquidity and deal flow. And he's asking how much of a problem is toxic flow and can it be mitigated? I think this is really a very risk desk, trade desk oriented question here.
This is exactly our speciality. I mean, this is what we deal with, and this is our part of our reason for existence with our brokerage clients. Toxic flow, much more of a problem, years ago in the past when the technology and really the skills weren't there to be able to handle it. In the part of the industry that I'm in and who were serving the brokers, I just don't think we were skilled enough things were moving very quickly in that retail space. A lot of different flow was coming through, and I think that toxic flow was a problem that was black and white. If you identified toxic flow, you needed to remove it. But it's changed, and that's been a part of what we've been a part of and proud to be part of. Toxic flow, quite often it's the problem for toxic flow initially stemmed from the proliferation of the multi-asset, multi-manager accounts where they would, have one core account, one head account, and that account would trade, and it would cause all the other accounts that person is advising or managing their account for them, cause them to trade as well, and all in different sizes and that sort of thing. But it was all happening at the same time, and often. Well, what happened is some of those groups have grown big enough that when they do trigger, there might be many thousands of individual accounts that trade at the same time, and they're all trying to get that same liquidity or same price, and it can overwhelm the liquidity. So, look, there's nothing nefarious in that though. It's just that they've become big and too big for the existing liquidity at the time and the skills and the technology to handle it. And so we had to. All of the prime services brokers had to sort of move that off. And so no one was happy. The client who was not doing anything nefarious wasn't happy, their broker wasn't happy, and we weren't happy because we weren't getting the flow. But we've put a lot of effort into working out ways to manage that flow. And there's a lot of different ways you can be more sophisticated in the execution. And first off is identifying flow as toxic. So you don't want false flags. You don't want a coincidence and then you kick off the client. You want to be able to be smart enough to know the coincidences versus actual toxic, nefarious activity. And you want to be able to, when it's nefarious and you've proven it, you get rid of it, you report it, and you move on, and the industry is better. If it's a coincidence or just simply a large number of clients that are being managed and being told to trade at the same time, it's not nefarious, it needs to be accommodated. And that's where we see our role as having that expertise and the tools to accommodate that flow without the market being, affected by it or annoyed by it. And part of it is the utilisation of dark pools for liquidity. So we have our open liquidity providers, like all the big banks and big non-banks around the world that are streaming us prices constantly, and we're aggregating those. If we pass toxic flow to them, that immediately hurts them, and we can't do that. We've got to protect ourselves. But like I said, there are ways where there are a number of different dark pools and ECNs that are institutional that can be accessed, and you can trade into those anonymously without affecting. The people that are pricing into those know it's anonymous and are there pricing saying, yep, we're happy to be buying and selling here. So whatever it is, come and deal with us. We're big boys and girls, big people. So it's access to those things and being smart about the way you identify which flow is really toxic and which isn't, and don't be hurt by false flags. And that's for one thing where AI, I predict, is going to be extremely useful for all of us. The identification very quickly of patterns and the prediction of patterns, and then being able to treat those flows differently quickly as a result. And we're talking microseconds here, but things have to be done. But it's access to all of those and not hurting the core liquidity providers who are the bread and butter of the industry, really, the people that are out there flying the flag and pricing. We've got to protect them. We can't have nefarious people, and even we've got to find ways where it's a coincidence, but we still are able to accommodate it.
Yeah, that was, I think you partially answered my follow-up question. You mentioned AI tools and things like that. I guess my question is the technology going to keep up with the sophistication of the market and the sophistication of traders? Because it seems to me like when you speak about coincidences, oftentimes I feel like it is because traders are becoming ever more advanced. If they are whether they're retail investors or institutional investors, meaning family offices, hedge funds, and things like that, using some sort of software technology to essentially plan out their trades or to execute their trades. And it seems like the sophistication on the trader side is expanding. And so the technology needs to expand also on your side in order to quickly make that decision, like you said. Is it a coincidence? Is it just something that looks off but is actually genuine, or is it something that should naturally be canceled or removed or whatever it may be? Is the technology going to keep up?
I think definitely. I think we don't have too much worry about that now. I think technology, some of the advances we've seen recently, they are perfectly suited to our industry. So the AI boom obviously is something that is going to be utilised a lot in this very fast-paced analytical analysis and detection of patterns in data. That's live data and needs to be detected and then acted on within milliseconds. I think obviously that is important. Some of the advances in quantum computing as well are obviously important. I think quantum computing is, we're keeping our finger on the pulse there. It doesn't seem to be really ready, obviously, yet for any use for us but it is something that will definitely become useful when it is mature and ready. AI is already useful, and it became quickly useful, and it's growing in use really quickly. I mean, some of the advances that we've seen in the AI-driven trading and risk management tools, it's pretty exciting. I think it's really exciting. I think the technology, we don't have to worry about the technology keeping up. I think it's there, and it's going to be really, I think, a beneficial thing for everyone in the industry, because I think it will improve our ability to execute into and cultivate liquidity.
Mm-hmm. Awesome. Taking a step back, looking at geographies again, we have a question from Drew. The question was, are you seeing growth in liquidity demand for institutional or retail offerings in Latin America and Africa? Are these regions continuing to grow for 26 Degrees in particular, and just in general, in terms of the industry, in terms of your opinion, Gavin?
Look, to be perfect, that's not true, neither is it? I think I don't want to give any sort of keys away to the big people in the industry.
No, not at all. I think
I'm sure it wasn't Drew. I'm sure it wasn't Drew.
Oh, I don't think it's. I don't think it's. No, I don't think it was Drew Niv or anyone like that. It wasn't Drew Niv. No, it was not Drew Niv.
Yeah.
No.
You never know. He could be trying to get some secrets from us. No,
sure. But I mean, Gavin, as with all interviews, I mean broadly, without giving anything, without giving anything away. It's just that I think for me personally, when I read this question, we've heard a lot about the retail side of the industry expanding in these regions, specifically LATAM and Africa, as these regions become more financially educated and they have access to banking and all of these things. One of the things that we've heard and seen is that these regions have grown from a retail trader perspective. There's demand and there's obviously offerings for these traders, but from the institutional side or from liquidity side, are you also seeing growth, or how are you seeing these regions develop?
Look, to be perfectly honest, Latin America and Africa have never been our focus, and it's not something that's on the drawing board for us. They are still sort of too immature markets yet for us to be involved from our perspective. There'll need to be pioneers that go in there and help build that industry there. And, I'm sure it can be a benefit to their economies and the population there. But again, I also think that we've got to be making sure we're looking after the vulnerable people, and the industry has to be, accountable to that. And we have to, make sure we make the right decisions there and that we can live with. So in my mind, it's not an area that I'm interested in going to yet. It could be in a few years. I think where our focus has always been is the major jurisdictions, but also particularly the Asian sort of realm. We have a fantastic business and presence in Japan. We've got great presence in Korea and Taiwan as well. They are markets that are unique, like I was saying about the Nordic region. But, it's great to get into a region where you can learn the unique aspects of that region and that culture, and develop your service offering and the way in which you have relationship management, the way in which you can, encourage people to be more sophisticated and take on more sophisticated tools. It's different in every region, the way you have to sort of approach those meetings, and it's great to build a team that have those skills, and it's a top tier team that we've been lucky to put together, and they're constantly going out through all those regions, speaking to brokers, speaking to hedge funds, and it's very exciting, that part.
Mm-hmm. Great. Awesome.
The other one is the UAE, obviously. The UAE is the next one that we'll be looking at, I think. That's undoubtedly booming.
Yes, the Middle East and the UAE in particular have been really on everybody's roadmaps, even evident by the many different industry conferences that take place there every year now. So that's definitely something to look forward to, and be exciting to see what 26 Degrees has up its sleeve for that region of the world.
Okay, we'll tell you first. Once we finally decide, we'll make sure we tell you first.
Deal. So, Gavin, I'm just looking at the other list of questions. I wanted to kind of liven up the mood a little bit. Maybe we could ask you a little bit more personal stuff. Is that okay?
Oh, no. Really? Okay.
All right, I've got an easy one. I've got an easy one. This is from Tony. He seems to like to play golf, so he wants to know, what are the top 3 golf courses that Gavin has played on?
That's not a good question for me. I'm much better at navigating. Not that I'm a great trader, but I'm much better at navigating market swings than golf swings. That's for sure. I'm a terrible golfer. I think, in terms of, I have played golf on some good courses, but in terms of the best course, I would have, given I lost 12 golf balls in one round at the New South Wales Golf Club, that's probably the best golf course I played on, just by that factor. It was hard.
Well, me as somebody who doesn't play golf, I can't really relate to any of this, but I guess, Tony, if you're watching or listening, you've got to head down under to find some good, do they call them links? Could I say that, Gavin?
Links is a particular type of golf course, but this New South Wales golf course is right on cliff line overlooking a coast, and it gets some crazy weather sometimes. It's an amazing place to be, but if you're not good at golf, if you're not expert at golf, it's a very, very punishing and painful course. I got to see that view from lots of different vistas around the course. I spent a lot of time chasing the balls and that sort of thing. So I definitely got my money's worth there, and I would have to say that's probably the best and funnest course I've been on.
Great. Thanks for sharing. Thanks for sharing those insights. I'm going to ask the last question that we received, and then I will throw it out to the attendees if someone has any questions that they'd like to ask directly in the Zoom interface. And Gavin, maybe in answering this question, you could speak a little bit to 26 Degrees' sort of office culture around the different offices that you have. This question came in from Amanda. Her question is very simple. Are you hiring? I'm a recent finance graduate and looking to join a solid team in the financial markets. Or maybe where can Amanda go to look at vacancies or career opportunities at 26 Degrees?
Look, we're very open. We have a very high-profile internship program every year, which is called the Finance Fast Track Program, which I might mention in a little bit. But the key answer is we're always looking. Never be afraid to just send in your CV. Never be afraid to reach out. We are always looking for talented people. But having said that, it is very tough to get a job. We are very, very demanding in terms of intellect, in terms of emotional intelligence. We're demanding in terms of proof from your academic career that you're a smart, focused, detail-oriented, don't make mistakes person. But having said that, and look, we advertise for our internship program only for a few weeks a year, and we get over 1,000 applicants from right across Australia, obviously mainly. We have a high school when people are 17, 18, they graduate from high school and go into university, and there's a test there that's gives them a mark out of 100. It's called the ATAR. And the highest you can get is 99.95. And this year we actually turned down 3 people with that mark. they didn't quite tick all boxes, but just the quality of the people that are applying, that are interested in finance and interested in, particularly in maths and physics, where they're interested in the application of that to trading in the tech sense and algorithmic trading and those sorts of things, and analysis of data quickly, AI, quantum stuff, how that's going to be applied to the markets. And when we get them into our internship program, we don't just give them menial things to do. We have a rule that they have to do a project in their 3-month summer internship, and it has to be a project that is actually something that we're doing and that no one else is actually working on in the company. It's a project that's real, that's going to produce something that we're actually going to use. And every year for the last 11 years when we've had this internship program, there's been 1 or 2 tools or something that's been developed by the brand new interns thinking a little bit different way, and we use it today. So it's awesome for them and it's fantastic for us.
Mm-hmm. It's a great, unique, and like you said, rigorous approach.
Yeah, it's definitely working for us, and people are happy. In the same way that 60% of our staff are 28 and under, so it's very young staff here, very, very smart, very passionate and applied. But in some ways they need to be sort of forced to take a bit of a step back throughout the day and have a rest. People sort of have contended in the past that millennials are a little bit lazy, not driven. That's absolutely not what I say at all. It's the opposite. But they have to be doing something that's real. But they're smart enough to know when you're just giving them something to waste time or to test them. They don't want that. They want to be building value. And if you can give them value to build, they will just stick at that and keep going until they finish it. And like I said, you have to. My biggest problem is trying to get them to take time to relax and that sort of thing. And that's why we spend a lot of money on an office here, which I think you've seen, that we've got a lot of that sort of recreational vibe to it. We've got a culture that's really relaxed. So while it's competitive to get here, once you're here, it's not competitive. We don't put up with, I've worked my whole career in US investment banks, that dog-eat-dog competitiveness. That doesn't sit well with me. I don't think it works. It doesn't work for minorities, doesn't work for all genders. It doesn't work for this millennial generation. They want something relaxed, they're doing value, and then, they're getting a reward for it is even less of a thing for them. They want to know they're doing something well and doing something valuable and creating. Of course, we pay them well as well, but it's not really the driver.
Sure. But thank you definitely for sharing those insights. Yes, I've seen quite a number of recreational things in your different offices around the world, between racing simulators and ping pong and all of these different things. Gavin,
what is your sport, Nikolai? What is your sport?
My sport, well, I've tried many over the years. I guess you could say my hobby is bodyboarding, which is like fake surfing, I would call it. So you don't stand up on the board, you basically lay on the board. I think you would be familiar with that because in Australia there's a lot of water sports out there on the ocean, and this is just something that I would call it, let's say, maybe a variation of
I love it myself.
It's an easy variation. It's an easy variation of surfing, and having moved to Cyprus last year, I'm kind of looking around. I'm like, all right, where are the surf spots? Where are the spots to go ride some waves? I can tell you that I've never played golf, maybe mini golf once or twice, and I think from yourself and everyone else who has played golf in our industry, the feedback is it's a very, very difficult sport to really excel in. And so when you spoke about golf courses, I think no one will be surprised to say it's okay, Gavin. It's okay.
Well, Nikolai, I know many places for you to go bodyboarding here in Sydney, so I look forward to you coming and visiting us at some stage soon, and I'll make sure you're looked after. We will have a great time.
Yeah, that would be great. Gavin, I wanted to take the time to thank you for joining us on our first, Ask Me Anything session. I hope it was worthwhile for you. It was definitely worthwhile for myself and our audience. Always a pleasure to see you. And we wanted to wish you luck in 2025, and we'll see you sometime soon at an industry event somewhere.
Sounds good, Nikolai. I think it's a great format. I'm glad you're doing this. I will definitely be watching and supporting as you go through with this, and it's only going to grow. I think, yeah, great format and good luck with it.
Thank you. I appreciate it a lot. Thanks, Gavin. Have a great
Cheers.
one. Thank you to all the attendees. We'll have a recording of this session available on FinanceFeeds YouTube and on 26 Degrees social media channels very shortly. Thank you.
Cheers.